Hi, and welcome to the Stock Market Palantir. Don't forget to subscribe and drop your comments below. All right, let's see the analysis.
Monday, February 23rd, 2026. NuScale Power closes at $12.60, down 6.25% on the day. Total volume, 29,371,812 shares traded. That is a massive surge compared to the average daily volume. And if you pull back the chart, the picture gets even darker.
Much darker.
We are looking at a stock that has collapsed approximately 75% from its October 2025 all-time high of $57.42. It has definitively broken through the major support zone of 1430 to 1460. So the question we are wrestling with today is simple, but it's terrifying for anyone holding a position. Is this price action a fire sale on the only NRC-certified small modular reactor developer in the United States? Or is this a terminal breakdown caused by the exit of its primary strategic backer and, looming legal liabilities? I will be arguing that this is a painful but necessary institutional rotation. I see a generational buying opportunity here supported by an absolute regulatory monopoly.
And I come at it from a completely different way. I look at those exact same numbers, and I see a fundamental failure of governance and execution. When the company that basically built you decides to leave the building, you don't buy the furniture they left behind. This isn't a rotation, it's an abandonment. The market isn't wrong here. The market is finally waking up to the fact that the Emperor has a certified design, but absolutely no clothes.
It's a stark difference in perspective, which is exactly why we're here. Let's lay out our cases before we get deep into the weeds of the trading data. I want to be crystal clear about my thesis. The market, in my view, is misinterpreting a shareholder transition as a business failure. We are seeing a technical drop, driven by the liquidation of Fluor Corporation's position, not a flaw in the underlying technology.
But you can't separate the two so easily. The business is the technology, and the technology requires capital.
I think you can separate them, and here is why. NuScale remains the only entity with NRC design certification, period. That is true for both the 50-megawatt electric and the uprated 77-megawatt electric designs. We throw around the term certification like it's like a driver's license, but let's be honest about what that actually means in this industry. It means $500 million in regulatory spend. It means 2 million pages of documentation reviewed by the Nuclear Regulatory Commission.
Which took a decade.
Exactly. A decade of rigorous testing. That is a moat that no amount of stock selling can bridge for competitors. And while you focus on the selling, look at who is actually buying. The smart money is loading the boat right now. Goldman Sachs now holds a 9% stake. Vanguard increased their holdings by 30.56% in the last filing. BlackRock increased by 70.47%. These aren't retail traders gambling on a meme stock. These are the architects of the financial system betting on a recovery. The average price target from 14 analysts is still sitting at $28.46. That implies over 111% upside from where we are sitting right now at $13.
That's a compelling argument on paper, but have you considered the actual quality of that smart money versus the insider money that just left? My thesis is that when a strategic partner of over a decade sells everything, you need to listen. Fluor Corporation didn't just trim their position to rebalance a portfolio. They sold 71 million shares on February 13th, and they've signaled they're exiting completely by the second quarter of 2026. That is a vote of no confidence from the people who know the engineering better than anyone on Wall Street.
Or it's a vote for their own balance sheet.
You mentioned Goldman and BlackRock, but index funds often buy because they have to, right? To match a weighting in an ETF. Fluor chose to sell. That is an active decision to leave. And it's not just Fluor. Look at the scandal surrounding the ENTRA1 Energy partnership. We are talking about a $495 million milestone payment to a partner that allegedly has no meaningful experience in nuclear development. That payment triggered class action lawsuits, it caused expenses to balloon, and the financials, they are just broken. You have a market cap hovering around $4 billion against trailing 12-month revenue of just $64 million. The EBIT margin is negative 1,249.3%.
Well, they're pre-commercial.
Let me put that in perspective for anyone listening who isn't an accountant. A negative 1,200% margin means that for every single dollar of revenue NuScale brings in, they are spending $12 just to keep the lights on. That isn't just a burn rate, that is a bonfire. You are paying a massive premium for a company that is burning cash at an alarming rate while its literal parent company walks out the door.
I see why you think that. It sounds alarming when you list it out like that. But let me give you a different perspective on the Fluor exit, because this is the absolute crux of the bear case, isn't it? Fluor sold 71 million shares, but let's look at the mechanics of that trade. It was a block trade. It was an open market transaction with Goldman Sachs International as the counterparty. The average price was roughly $19.05.
Exactly. They sold at 19. We are currently at $12.60. They saw the writing on the wall. They took the money and ran before the stock crashed further.
Or they saw a construction cycle ending and an investment cycle beginning. You really have to look at the history here. Fluor is an engineering and construction firm. Their business model is to build things, pour concrete, and weld steel. Their business model is not holding volatile equity in energy startups for 20 years. They incubated NuScale. They funded the R&D. They got it across the finish line to certification. Now they are monetizing a win to return capital to their own shareholders. That is standard corporate strategy. It's like parents dropping their kid off at college and driving away. It feels like abandonment, but the kid is supposed to be independent now.
Right, but
The problem is, the market hates uncertainty, so it panicked. But look at who picked up the slack. Van Eck Associates increased their position by 117%. The asset is maturing from a strategic project owned by a builder to a broad market financial instrument owned by index funds and quantitative managers. That is a graduation. It's not a funeral.
a graduation? That is a very charitable way to describe a corporate dump. You mentioned Goldman Sachs and Van Eck absorbing the float. That's true, they are buying, but let's talk about the overhang. Even if you believe the tech is world-class, Fluor still has 40 million shares left. They have committed to selling those through structured programs with Bank of America and Citibank. That supply is going to hit the market continuously until mid-2026. It's simple supply and demand.
It creates a ceiling, I grant you that, in the short term.
It's not just the ceiling, it's a wet blanket on any potential rally. Every time the stock tries to tick up above $13 or $14, you have this massive supply waiting to be unloaded. And Fluor knows the technology better than anyone. Think about this logically. If NuScale was on the verge of signing a binding deal that would double the stock price, do you really think Fluor would be rushing to the exits at $19? They would hold. The fact that they are selling suggests they do not see that near-term upside. If they thought a big contract with a hyperscaler like Google or Amazon was a month away, they wouldn't be selling at these levels.
I'm not convinced by that line of reasoning because it completely ignores the timeline of capital. Fluor is not a hedge fund. They can't sit on a multi-billion-dollar position hoping for a pop. They need cash for their core operations to build other things. But let's pivot to your second point, because I think that is actually the more dangerous narrative you are pushing here. The Entra1 controversy.
It is dangerous because it strikes at the very heart of trust. The drop we're seeing, that 75% collapse, isn't just about supply and demand. It is about credibility. In the third quarter of 2025, NuScale paid $495 million to Entra1 Energy. That payment caused their general and administrative expenses to balloon by 3,000%.
It was a milestone payment. It was tied to the commercialization program, explicitly in the contract.
But tied to what specifically? The class action lawsuits, which, by the way, have a lead plaintiff deadline coming up on April 20, 2026, allege that Entra1 had no meaningful experience in developing or financing nuclear projects. The core allegation is that NuScale misrepresented this partnership to make their commercialization strategy look way more robust than it actually was. When you are a pre-revenue company, your most valuable asset is your integrity. If investors feel they were misled about the capability of a key partner, that valuation premium evaporates instantly. And let's explain why that April 20 deadline matters so much. That is when the court appoints the lead plaintiff, usually the investor who lost the most money. That is when the legal team gets organized and the discovery pressure really ramps up. It is a massive cloud that hangs over the stock for months, if not years.
Litigation is standard operating procedure for high-growth tech firms in the United States. You know that. Anytime a stock drops more than 10%, the ambulance chasers come out with class actions. It's practically automated at this point. The core product here is not the Entra One partnership. The core product is the Voyager plant, and that product works. The 77-megawatt electric design is approved. We have the agreement with the Tennessee Valley Authority, the TVA, for up to 6 gigawatts of capacity. We have the RoPower project in Romania, where a final investment decision is expected late this year. Those are the real value drivers. The Entra One issue is an intermediary squabble that will almost certainly be settled out of court.
But the TVA deal is non-binding. That is the magic word in this sector, non-binding. NuScale has absolutely no firm binding sales yet. And while NuScale is distracted dealing with these intermediary squabbles, look at what the competition is actually doing. In January 2026, just last month, Meta announced agreements for 6.6 gigawatts of nuclear energy. They partnered with Vistra, they partnered with TerraPower, and they partnered with Oklo. Who was notably absent from that list? NuScale. If your technology is supposedly the only one that is certified, why did Mark Zuckerberg and his team overlook you for companies that haven't poured a single cubic meter of concrete? That matters.
That's a fair observation, but let's look at the regulatory reality behind those headlines. You mentioned Oklo and TerraPower. They are signing deals, yes, but do they have a certified design? No. NuScale is the only one with the stamp of approval from the NRC. The Meta deal is a great headline for Oklo, but a headline is not a power plant.
Being first to the starting line doesn't matter if you run out of money before the gun goes off.
But the gun is going off. And this is where we have to talk about the macro environment, specifically the AI energy crisis. We are seeing a demand for power right now that we haven't seen since the Industrial Revolution. Data centers for AI need baseload power. That means 24/7 uninterrupted electricity. Solar can't do that because the sun sets. Wind can't do that because the wind stops. Batteries are entirely too expensive to back up a gigawatt-scale facility for days at a time. Nuclear is the only carbon-free option that actually works at that scale.
I agree with the macro thesis entirely. The world desperately needs nuclear. I just don't know if the world needs NuScale.
But NuScale is the only one legally allowed to build. We have the Trump administration's Executive Order 14300. It mandates NRC reform, specifically targeting 18-month licensing deadlines. NuScale is the only certified design right now. When these new rules fully kick in by mid-2026, NuScale is the only company ready to actually pour concrete under that accelerated timeline. They have a multi-year lead on Oklo and TerraPower regarding actual verifiable certification. You can sign all the non-binding deals you want with Meta, but if the NRC hasn't approved your design, you aren't building anything. NuScale has done the hard work. The reason Meta might have gone with Oklo is likely price, or promises on paper. But when they realize they need power now, not in 2035, they will have to come back to the only certified vendor.
That regulatory moat is real, I won't deny that, but it is incredibly expensive to maintain. And this brings us right back to the financials. You can have the best technology in the world, but if you go bankrupt, your shareholders get zero. NuScale is burning $40 million to $45 million per quarter. They haven't turned a single profit since the 2022 IPO. The estimate for 2026 is another loss of 78 cents per share.
Revenue is forecast to grow to $133.9 million this year.
Against a $4 billion market cap, that is a drop in the ocean. And with the Tray 1 payment draining the coffers, how do they survive until the 2030s when these plants supposedly come online? Dilution. They will have to issue more shares, diluting the existing holders even further. It is the only survival mechanism they have left. So you have floor selling on one side and the company likely issuing new shares on the other. That is a supply tsunami.
That's an interesting point, though I would frame it differently. Dilution is the cost of building hardware. This isn't software. You don't just write a few lines of code and ship it to a server. You are building nuclear reactors. The smart money understands this capital intensity. That is exactly why they are stepping in now. They see the price of $12.60 as a discount caused by fear. Fear of the floor exit, fear of the lawsuits, rather than a reflection of the fundamentals. The fundamental reality is that the world needs carbon-free baseload power for AI data centers. You mentioned Meta. Amazon and Google are in the exact same boat. They need gigawatts of power, and they have the balance sheets to fund it.
Legal permission doesn't equal commercial viability. You need to look at the beta on this stock. The beta is 4.13. For those not glued to a Bloomberg terminal, that means NuScale is 4 times more volatile than the rest of the market. If the S&P sneezes, NuScale catches the flu. That level of volatility tells you that the market doesn't view this as a stable utility play. It views it as a lottery ticket. And honestly, the governance risks absolutely outweigh the technological potential for me right now. We have the Q4 earnings report coming out tomorrow, February 26.
Which will likely show the revenue profile I just mentioned.
Or it will confirm the massive cash burn. The street consensus is a loss. And let's not forget, the deadline for the class action is looming in April. The next few months are a complete minefield. If the earnings call tomorrow shows that the cash runway has shortened even a little bit, that $12 support level is going to look like a distant, happy memory.
I see the minefield, but I also see the absolute treasure on the other side. The stock is trading at a fraction of its potential value if they sign even one binding contract. If that TVA deal converts, or if RoPower hits final investment decision, this stock is not staying at $12. We are looking at a binary star here. In 5 years, this stock is either 0 because they ran out of cash, or it's $100 because they are powering Google and Amazon data centers. There is very little middle ground, and at $12, the risk-reward is skewed heavily to the upside.
If. That is the most expensive word in investing. If they sign a deal, if the lawsuits go away, if they don't run out of cash.
And if you wait until it's certain, you miss all the gains. That's the nature of the market. You buy when there is blood in the streets, even if the blood is partially your own.
I come at it from a strict position of capital preservation. The technology is certified, yes. That is a tremendous scientific achievement, but the business is failing. With a negative 1,249% margin and a massive supply of stock hitting the market from floor 40 million shares still to go, the risk of capital destruction is just too high. The upcoming Q4 earnings tomorrow will likely show another massive loss. I just don't see how the stock absorbs that supply without breaking down further. I would rather buy a company that isn't being sued by its own shareholders and abandoned by its own founders.
I disagree. I think the market is completely irrational right now. The smart money, the Goldmans, the BlackRocks, they are absorbing the Flourish shares because they see the long-term value. They are looking past the next quarter and looking at the next decade. NuScale is the only licensed SMR in an AI-driven energy boom. The price of $12.60 is a gift. It is a discount caused by fear, not fundamentals. Everyone is screaming fire because the stock is down. I'm telling you to look at the building itself. The foundation is solid. This isn't a collapse. It's a clearance sale for the asset that is going to power the AI revolution.
Well, we are about to find out. The next 24 hours with the earnings report and the next 4 months with Fluor's final liquidation will ultimately determine the fate of this company.
It will determine if NuScale survives to be a titan of industry, or as you fear, a cautionary tale of the commercialization gap.
Indeed, it is up to the listener to decide between the technical safety of the NRC certification and the very real financial danger of that balance sheet.
And that is exactly where we have to leave it. A fascinating clash of engineering success and financial struggle.
It certainly is.
Thanks for listening.
If you like this video and want to watch more content like this, don't forget to subscribe. Thanks for watching. See you.